All right. Good morning, everyone. Todd Gordon here with tradinganalysis.com. Just talking to Tony, and he is under the weather. His kids in the house, and people who generally work in close vicinity with their kids always wind up sick. So all's well. Just talking to him in the world of MotiveWave. They're working towards version 5, and that's that. So again, welcome. I know a lot of you are repeat Wednesday attendees. So is everyone okay? Everyone doing well? Good holiday season? Everyone healthy and doing well and ready for some volatility in the market? First time, welcome, Mahesh. Welcome. Yeah, this webinar is growing more and more, so it's good. It's good. So we'll have some fun. As we always do, I like to take a little poll. Welcome, Alfred. That's great. Let's see. I like to take a little poll and just see what you've come here to accomplish and how we can best serve you in our time together here on Wednesdays. So let me just see here. I'm showing screen number 4, and let me get the poll going here, and we'll just rip through this very quickly. 4 questions. And again, it just helps me gauge what the majority is here to accomplish and how we can structure it best. Juan, brand new to MotiveWave, everything. Well, welcome. Want to see if I should start using MotiveWave software. Okay. All right. Good. Good. All right. Well, let me do the polls, and then we'll dive in here pretty quickly. Okay. Number 1, are you currently a client of MotiveWave? Is that going to be yes, no, possibly in the future? And I need at least 61.8% of the votes in. Bad Fibonacci joke. And then we'll get rolling here. Attendees, let me make Tony a organizer. Okay. Perfect. There's our Fibonacci 61.8% with 65 very even. All right, perfect. Number 2, are you a client of tradinganalysis.com? Yes, no, possibly in the future. And go ahead, and there's going to be something, Juan, that pops up on your screen. Instead of me sharing screen, there should be a poll that pops up. I actually don't know what it looks like, but it'll give you a little radio button where you can check yes, no, or possibly in the future. Or I think you're annoying and I would never work with you. Or maybe that's a 4th option. Yeah, Gerald, I agree. We need to do a special webinar and just focused on MotiveWave. Totally agreed. Maybe in the new year I can work with Tony, and they've got a nice guy who's joined the team, and he's doing some webinars as well, Joe, on how to use MotiveWave. That's certainly, I can promise you that, Gerald, that I will work with Tony on that one and see if we can put something together. I totally agree. Thomas, good morning. Okay. All right. Close on that one. 68% in, 68%. Yep. 69%, 30%. Okay, only 30% of you are sleeping now. That's perfect. Number 3, markets I prefer to trade are multiple possible answers here: stocks, stock options, futures, forex. I'd be interested in your options education. Hey, James. Well, perfect. Yeah, we'll let you know about any future webinars. We'll be sure to email you that for sure. You need a day seminar in South Florida. Arthur, I love the sound of that. I haven't done one of those in a few years, actually. All right, 70% in, 30% of you sleeping. That's perfect. 69% stock options, 55% stocks, 36% futures, and 29% forex. You guys are stock options traders. Love it. All right, perfect. Last question, then we'll get rolling. The reason I choose to spend my Wednesdays with you are multiple answers are possible, actionable trade setups, market analysis, Elliott Wave education, MotiveWave education. Oh, Thomas, I didn't understand that GMCR trade. Didn't get in, and I feel like SH''T. Oh, why didn't you just ask, Thomas? I would have told you. Why didn't you just? I did a whole blog post on it, brother. I don't usually do whole blog posts on trade setups. All right, so we have with 69% of the vote in. Pretty consistently, 30% of you are sleeping. That's good. That's interesting. So 73% of you market analysis, 66% Elliott Wave, 56% actionable trade setups, and 48% MotiveWave education. You guys want the analysis, MotiveWave, or sorry, market analysis, Elliott Wave, trade setups, and then MotiveWave education. Got it. Where do you ask questions, Thomas? Let me know. Where do you? Oh, that's pretty rare, I would say, especially in especially in my daily videos below the comments. So, all right, we'll get in. We have a lot to talk about. We just came off of a huge trade. We'll get into that. I don't want to spend too much time. Obviously, if you weren't involved, that's not the thing you want to hear about. But well, I just want to talk about the setup a little bit. It was a really nice counter trend trade. It was a beautiful 5-wave setup. In GMCR, we were long options, and sorry guys, I'm still sick. We were long options, and the stock got bought out. So it was a beautiful Elliott Wave setup using MotiveWave that turned in. Oh my God, I'm gonna die. Hope I can get through this. That it was a beautiful 5-wave setup that turned into a buyout. We were long options, and we made 3,600% on the trade. So it was kind of obnoxious, actually. Everyone's telling me they missed it. Anybody get in? I've got 2-3 people told me they missed it, but tell me who got in. So we'll talk about that. Okay, so here's the S&P, and clients of trading analysis, and just so you guys know, this is the free video I did last night. This is my company, tradinganalysis.com. Those of you who are new, I work closely with Tony Lindsay and the crew at MotiveWave. This is my website, tradinganalysis.com. We work very closely with MotiveWave. I've used the software for, I don't know, 5, 6, 7 years now. I'm one of the earlier adapters, and this is the software in question, MotiveWave.com. And in terms of charting, all-around charting solutions, packages, specifically for Elliott Wave, Fibonacci, it is second to none. And it has a complete offering. So that's your 2 presenters here. Tony is under the weather, as am I, but I'm gonna fight through it. So where are we in the market? I'm gonna be completely straightforward with you. I don't know. I am a big practitioner of Elliott, and right now the markets are sideways. Okay, I have a few possibilities, and I'm willing and ready to trade this. But just take a look at the 3-hour in the S&P, guys. We are sideways. We are completely, November was a complete sideways month. No real price movement, no real trend change to speak of. The volatility was amazing. I mean, we traded up and down. I mean, we did well in November. A lot of nice follow through. I mean, it was good. Just we didn't go anywhere. So there's a lot of back and forth. We did a lot of short-term kind of range trading and stuff like that. And here we are right in the middle of the November range. So I'm starting to just simplify things here a little bit and move into this wave count, which is very, very simple here. I talked about it in the member video last night, which is just a simple little 5-wave move from the August lows. So we do 1, we do A, and then you have a choppy 3-wave kind of corrective shape move up in B, drop in C for your expanded flat. Actually, it'd be a running flat. It's a running flat. And then you go up in 3, that's fine. And then I think we might be moving into a triangle. Okay, so while the triangle is in play, we would need to stay above on this S&P cash level, 2043 half. Okay, the E-wave can get down as far as 2043 to keep this pattern still valid. So let me go from the 3-hour down to the 1-hour, and let's just kind of move in on this SPX pattern. And those of you, who follow know I like to do the analysis on the cash markets. The futures are kind of a derivative of the cash. I want to do my analysis on the underlying 500 stocks as they trade today, and that's represented by the SPX. The futures are, it's where they think the market's going to be in up to 3 months from now. So it's a cleaner bit of analysis to do SPX. Yep, exactly. Cash equals SPX. Yep, exactly. I'm not even gonna. I'm sorry. But I can't pronounce it. I'm sorry. Very interesting name, but I wish I could pronounce that. So apologies. So yes. So traditionally the triangle, the final E wave of a 5-wave move, it's going to be A, it's going to be B, C, D, and E. Highs are getting lower, lows are getting higher. We should not break below the C wave low. And usually what happens in triangles, the alternate waves have a Fibonacci relationship. So the C wave, Charles, will relate to E, which is Edward. The D wave, David, will relate to the B wave, Bravo. All right. So let's just see if that held. And usually what happens is you get a 618 relationship of alternate waves within a triangle. So we're going to ratio analysis. We were just studying D wave compared to B wave. And the first one, the D, is what you're studying, your current wave. And then the second one listed is the wave that you're going to, in which you're going to use to compare. Okay. Didn't plan this, but look, I mean, to the tick. Okay. D wave was 61% of B wave. To the tick. All right, let's do the same thing. Now, C wave, we're going to compare that against E wave. Ratio analysis, E and C. Oh, how you doing? Have a nice day. So the makings are there for a possible low here in this triangle today. Thanks, Alfred. I appreciate that. Love your boy. Your twin boys are fun. Yeah, they're, oh my God. Boys are nuts. Boys are crazy. I love them. I got twin boys. They're 21 months. They're fun, but boys are insane. They're just relentless. I mean, we all little boys. I mean, I don't know. I don't have girls, so I can't say that for certainty, but boys are just unstoppable. So S&P, we have a pretty good potential low here in the SPX, and just got to keep in mind that it's coming out of a consolidation that began on November 3rd, and here we are December 8th, still in that consolidation. So if you kind of compare this, kind of grind this up, and put it through the all the fundamental stuff. What we like to do is the fundamentals, what everyone's talking about, the macro themes, the stories. You grind all that crap up and you put it through this filter right here, and then you say, okay, everyone's looking for a Fed rate hike. We had a strong jobs report on Friday. We had the ECB the day before be a little less dovish or accommodative than we were hoping. The euro has rallied quite sharply as the dollar sold off because the European Central Bank wasn't, just willing to throw the kitchen sink at the problem in terms of quantitative easing. So we had a hawkish, which means a central bank who's not as in favor of massive levels of QE or extremely low levels of interest rates. We had an ECB that was a little bit more hawkish than expected. And then we had the non-farm payroll came out above 200, strong number. That all but guarantees a rate hike on the 16th. So let's just kind of take all that fundamental stuff and put it through the grinder here. You had the ECB saying they're being a little bit more hawkish. A Fed with that jobs report who's about to become hawkish, which means start to tighten monetary policy. And on this chart, traders, I don't see anything impulsive on the downside, meaning I don't see any clean five-wave moves to the downside. This is not a 5-wave impulse. This really looks like a 3-wave move to me with a big old correction here in the middle. So generally, and what everyone's afraid of, the fundamentals and people who just kind of like to talk are saying, well, when the Fed starts to raise rates, markets are going to crash. I've held to the belief for a long period of time that that's not the case. In fact, markets will rally following the rate hike. It's when we start getting out to here is when the problems come in. Okay, it's when here on the SPX monthly, it's when we start getting up to 23, 24, 2,500 is when that wave 3 ends. Then we're in for a pretty sizable 1,000-point drop in the S&P. then we go up in wave 3, then we drop again. And that's why I've done a series of webinars over the last couple months, why we are heading into a period, 3 to 5 year period of massive volatility with no real trend change. This is going to be a trader's market. Easy money was made here when central banks are very accommodative. Easy money was made here. Okay. The buy and hold, the mutual funds, hedge funds who just turned into index funds, fine. Now they're going to get chopped up. Here's where your trading skills that you guys are working on will start to come into play. So I think the markets will do okay. We'll rally up another couple hundred points in the S&P, and then that's when wave 4 drops. Okay. Wave 4, I believe, matches up with the wave 2 decline here from the European crisis. And that was a 21% drop. So we should see something similar here. I think it's going to be greater than 20%, but we're coming into a period of massive sideways volatility in the market. So your trading skills will come in handy. Okay, so I'm leaning towards a couple different bullish counts based on that. This is my much more bullish count, which I don't think this is going to play out. This is basically a green 1-2, red 1-2, and then this will be even smaller 1-2. So this one's saying we're going to get a third of a third breakout, which is a massive rally, which maybe could happen, but probably not. And then this is my significantly more bearish count. So, how do you know which ones to pick? Right now, when I get 3 quality wave counts, I'm saying this is not a market to be very aggressive. Okay, not a market to be very aggressive right here. There's too many questions that need to be answered. But basically, what happens is, okay, if we break 2042, I know this wave count's incorrect, and then all I'm going to do is very quickly, if we break 2042 and we start pressing these lows, then I'm going to very quickly go over to the bearish count, and we're going to focus on the short side until we get down to the major decision points for this wave count. So we're prepared in either situation. If we break 2042 and 2020, we're going to be looking for a move significantly lower based on the bearish count. So I'm going in eyes wide open here, guys. Alfred, that's funny. So what's your time target and price target for SPX? Michael, give me information. What do you mean? For tomorrow, for next week, for 5 years from now? Give me more info. Dollar yen just broke through 122. Okay, good to know. Dollar yen has been looking pretty weak, which will drag that S&P lower. Futures are lower here today. We're down 8.5. SPOO's down 8, 9 handles. NAS down 23. Dow down 50. Russell down 2. Bonds up a couple ticks. Dollars down pretty good today. That's interesting. Okay, good. I like that actually. Dollar's way down. So that must be that dollar yen. Okay. All right. So dollar's lower. We're going to talk about that. Okay. All right. So that's good. So dollar yen lower. Okay. I'm just thinking here. If we break lower, I'll tell you what, if we break lower, here's my immediate target. This is my trading plan for today. If we break through 2042, here's what I'm going to do. And this couldn't be any simpler. I'm just going to go over to the daily 3 hour, doesn't matter. I'm going to drop and make a study of the November 3rd to November 13th drop, and then project that down from the high here on December 1st. That measured move target is going to be my immediate downside target. I don't care really what the wave count is here at this point. I am just going to do a measured move drop. So we're going to go over to the Fibonacci expansion tool. I'm going to go to the high, down to the low, back down to the high, or back up to the high. The 61.8% relationship of the November drop compared to the high from December, that was the low 2044. Here's the plan. All the Elliott Wave stuff aside, and this is still Elliott Wave. I'm just talking in terms of Fib to keep it very simple and not to confuse anyone. If we break 2044, immediately targeting 2007. And I think this is the same thing I said last week with you guys. I said it in another webinar. So here's the plan. If 2044 holds today and 2055 this low, if they gap down on the futures lower this morning, the internals look strong, sector participation looks good, everything looks okay, I'm going to look to trade to the long side based on this count. If we gap down, they're unable to close the gap, internals look weak, the sectors that you would want to, bears who'd want to see sectors leading on the downside like discretionary and technology and healthcare, if those sectors are weak towards the lows here, then I'm going to move just towards this analysis, which is a break at 2044 down to 2007. Okay, that's my game plan for today. That's it. And it's really as simple as that. So we're going to short weak stocks on a break at 2044 to 2007. If we hold this 2050 to 2040 level, we're going to try to act, the market's going to act strong. I'm going to buy strong stocks for a move up back to the old highs. Okay, that's going to be that. All right, a lot of questions. Let me take your questions here. Saul says, good morning, Todd. I'm long SDS, hoping to cash out after the 16th. Can you please cover the SPX for the possibilities? Okay, Saul, I just covered that one heavily for you, so let me know if there's anything else I can give you on that one. What is the time frame for IV? Implied volatility? What is the time frame for IV? Michael, IV. Let me know what you mean there. Sorry. Andrew says, any scenario where SPX goes down to 2020 again and rallies up from there. Andrew, 2020. Okay. Anyone who is kind of new at Elliott, please close your ears. But those of you who are comfortable with Elliott, possible that this is A, that's B, and then this is an A, B, C for C. Okay, so it's A, B, C, then we rally up in D, then we do E. Okay, that's the only possibility, but I think that's pretty outside chance. So that would give you 2020, Andrew. Upin, hey, have a look at IYT if you have not talked about that for a long time. We have a big divergence, Dow transports. Yeah, I mean, yeah, let me pull in IYT. That divergence has been going on a long time, especially, you know, with lower oil. And I'm just typing this in, IYT. Yeah, you know, especially lower oil, that should be boosting the transports, and it's just not. This is your transportation ETF, IYT. Yeah, that's a IYT. It's funny, actually, it looks like the emerging markets like EEM and FXI. That's pretty bad. That's just not a happy stock right there. Yep. And especially with crude oil dropping, you know, that should be a boost for transports, and it's just not. So yeah, it's eventually these divergences are going to have to be unwound. I don't know when that's going to happen. Jonathan, euro dollar almost 110. Yeah, we'll talk about the dollar next, Jonathan. Yeah, we're actually short the dollar. We have a butterfly going on with research customers, and that was another wave 5 high, so that was pretty good. So I'll show you that setup. All right, so in the dollar, let me get the chart over here. Trade UUP. So we have a DEES 5, 25 half, 25, 26 half butterfly. Okay, so we sold 20 of the 25 half calls, bought 10 of the 25s, bought 10 of the 26 half. It's actually a broken wing butterfly, which is designed to take advantage of fourth waves. Right after third waves falling into a fourth wave. So the dollar's getting smoked. So we are net short this pattern. The deltas, we have a minus 160 delta on the setup, which means it is a range bound strategy that is theta positive, $2 a day in theta, with a slight downside bearish. Bearish bias. So let me just pull over the dollar. Okay. So here's the dollar, and like the S&P, the dollar is also going into consolidation into the Fed. So beautiful ending diagonal. Really nice ending diagonal. This was actually similar to the GMCR setup, which was wave 1, wave 2, wave 3, wave 4, little diagonal in wave 5. So we actually got short the dollar here. Then ECB came out. The euro rallied as the dollar sold off. So we did a butterfly, broken wing butterfly, which basically the body of the butterfly needs to exist right in the middle of this wave 4 zone. So it's a theta positive trade, which means we're collecting time decay. It's got a negative delta of minus 160, which means it's got a slight downward bias. So that's fine. I think we're in some kind of a triangle, some kind of fourth wave. Don't know. Don't really care, provided it stays below 100.5 and above the invalidation, which is 96.5. So dollar's getting weak, and as Brett points out, dollar yen is dropping, and that is usually bearish for stocks. Euro is also rallying, I'm told. So let me just put on my FX hat, and I'm sorry I don't have FX quotes anymore, even on my MotiveWave platform. So I just want to see what Euro Yen's doing. Euro Yen is sideways. Okay, so it's an equal strength dollar move. So the dollar's being sold off equally against the euro and the yen. So that's good to know. So it's just pure dollar weakness today. So, I believe that the wave 4 is going to last at least the 0.618 4v2 time relationship and the 0.618 4v3 time relationship. So all that means is the total duration of wave 2, multiply that by 0.618, project it out, and wave 4 should be at least 61% of that, and more likely equal 100%. Okay, and then the same thing, you just take time duration of wave 3. Let's say it lasted, what is that? Let's just say it's 10 days for simple math's sake. 10 days would be 100% down here at 4v3, which would be January 11th, and more equally, it'd probably be out to the green levels, which are 1618 and 1618. So, this dollar range could last through January and into early February. So if we get a little bit of a bounce here in the dollar, I'm going to adjust the butterfly probably up and try to adjust the strikes up a bit, get a little bit more bullish, because I don't think the dollar is going to break through this 96.5. I'd like to continue to play a range bound strategy, but we'll probably adjust the strikes to give us a slight positive delta, still, theta positive to collect time decay, but in the body of this fourth wave. Let me know if that helps. Crude. Yep, Julie will do crude for sure. Any chance you can stay a bit in the open? I would open. I've got to get ready for CNBC. I have the show today. That's the only deal, but I mean, I can hang for a little bit. Sure. Any new candidates similar to GMCR guy? Well, all right. I'll do crude and then we'll talk about GMCR. I want to get the big macro markets out there because I know people want to know what's going forward. Justin, how do you think the Fed's announcement will affect the economy? Nobody knows. Nobody knows. That's just the deal. That's why price action is our best indicator right now as to how the Fed interest rate hike probably won't do anything. If anything, it's going to have the biggest impact on investor psychology more than the actual financials of the underlying economy. And is a quarter basis point really going to do anything? It's all about psychological perception. So I don't think it's going to really do anything in the economy. It's just what will it do to investor psyche? That's going to be the question. I think it's going to be a big old range bound situation. I don't think we're going to get a big movement. I think once we start hiking rates and the economy's okay, we get a couple rate hikes down the road is when the market can move up. Then it's going to be in trouble. Mahesh, what broker can I open with allows MotiveWave and data? If you go to MotiveWave, they have a list of brokers right here, motivewave.com. Just go right here, supported brokers, and you'll find everything you need right there. Yep. I took profit last week on Butterfly. I can't wrap my mind around that trade. Okay. No problem. We'll do that another time, more options stuff. Will you teach Elliott Wave anytime soon? I am new, Sebastian. Yeah, we're going to be doing a class coming up here soon on Elliott Wave. So be sure to check your emails from tradinganalysis.com. Okay. All right. Perfect. I see Apple in there, Brian. Yep, we can do the NASDAQ. It's pretty much the same thing as the SPX. I'll do the NASDAQ. We'll do crude oil. And then, yes, we do this webinar every Wednesday. Yep, we'll do NASDAQ. I'll do Apple. We'll do crude. We'll talk about GMCR. And then I see a question on Starbucks as well. So NASDAQ is the exact. What did I do? Okay, NASDAQ's exact same thing. It's a stronger market. The NASDAQ tech is stronger than the SPX right in here. So there's the count here on the NDX. So we've got 1. You've got an, this is actually an expanded flat in 2. And then you go up in 3, and then we're getting the triangle A, B, C, D, E. So over here on the 3-hour, this looks a little shallow. It's probably more like this to give you your 3-wave. You need a 3-wave move throughout. Decompose correction. Each of your 5 waves, the A wave, the B wave, the C wave, the D wave, the E wave, they all need to be 3-wave moves. And it looks like here we're going to have some weakness here on the open with the NDX, the NASDAQ. You need to hold above 45.81 for this correction to be correct. This correction to be correct. How does that sound? E and C, 618 relationship of E and C is going to be 4623. So 4623 is your should hold, 4581 is your must hold in NDX. And then the poor Russell, man, this guy is just weak. I'm holding short Russell in our portfolio. This guy just can't get out of its own way. The Russells, the small caps are so weak. Like the transports, the Russell, emerging markets, those guys are just in trouble. Along those lines, let me just talk about this. I'm also short China via a long position in YXI in our longer term portfolio. We put out longer term portfolio holdings for clients as well. Look at China. So this is the FXI. It's broken up trend support right back, trying to press lows with crude oil on the lows, emerging markets on the lows. That's going to kind of make me a little cautious about the bullish case on the S&P because emerging markets are starting to heat up again. Okay, broken Gartley, that's fine. Okay. I don't have a clear wave count in crude. I don't know what this is. Okay. I wish I did. I just don't. The only thing I can tell you is I don't like how the IQ data sends the data through here on this contract. I'd want to get the January contract. I will tell you that the level you want to focus on, okay, it sends me the continuous contract, and I need to look up what the January contract is. The January contract has a 1272 extension of this rally at $36.84. So that was pretty much the low. All right. So 36.84 held, and then I have support a little lower into the 36 level. I would not want to be short into 36. Okay. I would not want to be short into 36. And this is not a complete chart because, again, I don't like the way IQ data is sending me the continuous contract data. It's just not lining up right. We were short XLE, and we've booked profits on that. That's the energy ETF. I talked about that on the CNBC show. I have that out for the research customers as well. And we took full profits on a 65-63 put debit spread, and then it went all the way down to 61. But I do think we're starting to move inside of a fourth wave here that is very sellable, much like crude oil has a bounce coming. So I think XLE is going to bounce back up. So that's that. Okay, let's do take a look at gold. Where's my gold? Where's my gold? Up 1083. Yeah, okay, perfect. Oh yeah, I want to be bullish on gold here. Looks like an expanding diagonal. That's pretty ugly. I have to rework that. It looks like it's going to be 3, 4, 3, 4, and then down in 5. I've got to rework that. But here's gold. I do think gold's going to squeeze higher. Here's where I think we're at in gold. I think we're going to have a B wave move up in gold. And this is actually similar to the GMCR, a 5-wave move down. I don't think gold market's going to get bought out like GMCR did, but I think gold's going into an ending diagonal. Okay, so it's going to be 1, 2, 3, 4, and then down in 5. So this is going to be the B wave. So ending diagonals only happen in the 5th wave, and I have this as wave 5. So gold longer term, I think, is a buy, and I've been saying this for a couple of weeks now. I'm going to buy physical gold if I can get a look down here. I'm just going to buy physical gold. So I think it's going to take this shape right here. Up in B, down in C, up in 4, down in 5. GDX has been outperforming the miners. Oh, come on. GDX. Delete. Okay. Miners have been diverging to the upside. So let me just throw them in. Yep. And I'm just putting the miners on top of gold. See how the price of gold has made a new low into a 5-wave low, and the miners have been diverging higher. That's a confirming sign. So I actually might try to play a little scalp on the long side in gold up to about 1116 to 1135 with confirmation from GDX. Okay, that's that. So let me know if that helps, Kent. Dan, oil is possibly expanding diagonal with wave E failure for wave 4. Expanding diagonal with wave E. Okay, Dan, I'm gonna have to look at that one. Obviously, you're an Elliott Wave guy. That's awesome. I'm gonna look at that. This is recorded. Yep, James. Simon, I'm just not doing too much FX right now. Sorry, I wish. Glenn says, did you know GMCR was going to be bought out? Todd, are you holding out on us? I swear to God, I did not know. All right, so here's the deal with GMCR. We do all trades we put out in the trade desk. So everything is SMS'd out, text message out, everything. So we're very diligent. That's the XLE trade we just closed on the 8th. So what we did was in the GMCR trade on November 25th, we did a call ladder. Okay, and basically what I did is I wrote a whole blog post about it over in the man cave, which is right here on November 25th. And here's the reason for the trade. There was rumors out in the internet that GMCR is going to get bought out. Okay, I would never buy a stock just based on that. Okay, but on the 25th, we did this. And just take a look at the analysis here. Okay, this is the monthly GMCR on a log scale. Trend line, trend line, trend line, trend line, holding the 618 retracement. Okay, so the stock has gone from 159 down to 40 something. But if you look at the log scale, it's still in a good uptrend. Like, okay, so analysis starts there. Go down to the weekly, and you go, okay, so we have 1, 2, 3, 4, 5 into a ton of fib support on top of that 618 retracement that we saw from the monthly. Then you go down to the 3-hour chart, and coming from the wave 4, we had a nice 5-wave subdivision right in the middle of that massive fib support zone. And here was the kicker for me. They reported earnings which were horrible. Okay, the management did like $1 billion stock buyback at an average price of like $104, which was obviously a stupid move. But earnings were terrible, yet the stock gapped up on huge volume. So that told me, just through price action and Elliott, okay, if the rumors are true out there that this company might be bought out, that price action right there, which is being bought up on bad earnings, coming from a wave 5 fib support zone like that, following a wave 4 triangle completion, if there's ever a time to put on a low risk trade, this was it. Okay, so all we did was look for an A equals C move into the 59 area. But I was like, I want to have an option strategy that allows us to participate in the upside if this thing squeezes ridiculously higher. So So what we did was, those of you who are option traders, we will understand this. We did a call ladder, which basically means we sold the 52.5 calls, bought the 55s. This is a bearish bet. Okay. So let's say if you sell the 52s, buy the 55s, you're going to take in, let's say, $1. Okay. Then what we did with that dollar credit is we bought the higher 57.5 calls. Let's say they only cost 95 cents. So what that means is we have a net credit of 5 cents. If I'm completely wrong and the downtrend that's been in play drops away, we'll make 5 cents. But if the stock rips higher for whatever reason based on this move, then we're going to participate on the upside once we get above the premium paid for this option, which is 57.5. Right. So that was the trade, and they got bought out, and I still have a small piece of GMCR left. This small piece is up 3,000, so that's fine. It was all in all a pretty good trade. It wound up being the 57.5 call. I think we paid 85 cents for it, or whatever. We sold it for $32, and it was all from a Wave 5 setup. If you guys want the video, and again, I had no knowledge. Trust me, anybody could have looked it up in the internet and said, yeah, here's the deal. So I really hope the SEC doesn't come. So all in all, that was and then I did a little fun trade. I went up and made a GMCR coffee after that one. So, so there was the trade. So it was pretty fun. That's GMCR. Okay. If you guys want to talk about another kind of crazy trade that I'm looking to do with clients, it's kind of a range bound market, so you got to look for these kind of insane trades. Another one that I'm looking at, and Tony, I hope you're still listening. You might get a laugh out of this one. Is this one? If you guys remember, I said the dollar is going into a range bound environment, and I used to work for a forex company, so I know this. Anytime the dollar goes into a range bound environment, the earning potential goes way down. FXEM, they did a reverse 5-for-1 stock split. It went up to $10, $9, and so far the stock has gone from 10 down to 5, and it looks like this thing wants to keep dropping, especially as that dollar is going into a sideways environment. So I might actually, with research customers, look to get short this company and see if they can get back down and close this gap. All right, so that's going to be that, guys. If you would like, we have an offer for you. If you would like to take a trial to my company, normally it's $47 off of the website. Okay, so if you go, when the site pulls up here, the orange button will give it to you for $47. But if you go to this this link right now, you can get it for $7, which is for 30 days all access. So just go to tradinganalysis.com, and just in honor of MotiveWave, just put in Motivate, and you will get 30 days for $7. Okay, and that includes SMS, the chart room, daily video, the man cave, etc. Okay, so take a look at that. Motivate, tradinganalysis.com/motivate, and it'll bring you over MotiveWave, and it'll bring you over to an order form for $7. Yes, we do international SMS. Yep. Yeah, it'll be full month. You know what? I think we're going to bump out trials a couple weeks into January, because a lot of people have been asking, obviously, because the holiday's coming up. So, yeah, we'll bump them out a couple weeks to get you out into January as well. So we're going to do that for everyone. We've been talking about that. Okay, so that is that. And then the other thing, we do have the show today at 1 o'clock. That's going to be 1 p.m. That's on CNBC.com. The website is Trading Nation. I host the show. I trade live, take callers, cut up, have some fun. If anybody wants to call in, we have one more spot, and that's going to be 1 p.m. New York. And you can just call in. We can talk about anything, any position you want, just like we did here. Just talk about the markets. You'll be on the phone with me, and my friend Andrew Keene. He's another option trader. He's good dude, a little out of his mind. He's a pretty active trader. I like him. So if anyone wants to call in, one more spot, email me. Todd@tradinganalysis.com for 1 p.m. to call in. All right, so email me if you want, and there's one more spot left. All right, guys. I appreciate you hanging out with us here on Wednesday. I wish you guys a great rest of the week, and we'll see y'all next Monday, okay? Or sorry, Wednesday. And thanks, Tony. See you guys. No, we don't do PayPal, unfortunately. All right, yeah, Julie, I'll do bonds. Yep. I know you want me to do bonds. Yep, I'll do it. Let's see. Bonds. Okay. Bonds are also, just like the dollar in the S&Ps, bonds are also in big time consolidation. I'm still bullish, Julie. Bonds should be dropping away, and the shorter term treasuries are, but longer term 30s and 10s, they're not reflecting an interest rate increase because that's not their job. The shorter term treasuries are. I still think we're in a big old triangle here in the bonds. A, B, C, and then this is A of D, C of D, and then if we hold support down here around 153 and change, we should get a C of D move up to complete the A, B, C, D, E, and then I think we do eventually move higher in the bond market once stocks do finally sell off. Okay, again, this is a sideways bullish continuation, so if anything, I'd want to be buying pullbacks there. Let's go from the daily to 3 hour. Yeah, that actually looks pretty good right there. Looks like we have almost a 5-wave move up there. Remember, the D waves, just like everything else, is going to be an ABC. Decompose, impulse. Oof. Got to give MotiveWave some help there. All right, so it's going to be, oh God. Here, let me do this. Decompose, impulse. All right, it's going to be 1, it's going to be 2, it's going to be 3, it's going to be 4, and okay, perfect. I would say that's the outlook for bonds. If bonds hold the wave 1 high of 154, pretty much 154 even, that could be a good little setup in bonds. Might look to trade that one. That's close. We go down to 1 hour. Yeah, that's not bad. If you hold above there, 154, that could be a little long scalp with a tight stop just below. All right. Saul says, what is that 1 o'clock thing? What 1 o'clock thing? Oh, what is that 1 o'clock thing? Oh, so I'm on so I host a show on CNBC. I'm on every week and have been on for a couple years now. Trading Nation, which is a CNBC show. So this will turn to a live show at 1, and then they're already tweeting about our show coming up at 1 o'clock today. And then I'll go live in the air at 2:30 on regular CNBC. So this will go live online. It'll be on the homepage of CNBC. It'll say Trading Nation is live, like it is right here, and then it'll direct over to our show. So that's at 1 o'clock. That's on CNBC. All right. So if anyone wants to call in, email me. And we have 1 spot left. All right, guys, we'll leave it there and have a great rest of the week. And we'll talk to y'all real soon. Okay.